Hello, my name is Bryce Sweet and I am here from the Department of Accounting, Finance and Economics at Griffith University, Gold Coast campus. I'm presenting in front of you today my stock pitch for the company I've chosen, the Australian Securities Exchange LNT ASX. The purpose of this presentation is to do a financial review on the company of ASX. This presentation will take key points from the ASX Annual Report 2020 and from the JP Morgan report. This presentation will also outline to key investors what they should do with this stock and provide financial aid in their decision. The Australian Securities Exchange ASX Limited is an Australian primary source of security exchange. The company is publicly owned. The ASX Group, in broad terms, is an umbrella company that was developed to reflect the same intentions as the ASX Limited. The ASX Limited is a holding company that comprises of diverse securities for market activities that provide infrastructure for Australian needs and help create a global competitive capital market and a robust economy. The ASX has a market cap of 15.82 billion company that integrates exchange offerings, listing, trading, clearing, settlements, technical and informational services, and other post-trade services. The ASX is within the top 10 global securities exchange value by and the largest interest rates divided markets in Asia. The ASX generates strong cash flows, which allows high percentage of payout ratio. Notwithstanding the financial difficulties that has been shown throughout the duration of this year of 2020 with the introduction of COVID-19, as this virus has made its way seemingly from China to Australia, as a result saw the Australian economy shut down and huge financial risk. Nevertheless, the ASX demonstrates strong financial results were demonstrated during the first year 20. Including high margins, strong cash flow generated, and further demonstrating a strong market position. During the period of FY20, June 20, total raised was 25,957 million. This was an increase from 7,299 million raised over the previous month. Operational revenue, as reflected in the annual report, shows an increase of 8.6% increase, which compared to previous years, this was an increase from 863.8 million to 938.4 million during the FY20 period. Earnings before interest and tax, as per ASX settlement reporting, for the period was 652.2 million, up 8.5% on prior year, enabling a 4.5% increase in total ordinary dividends paid in FY20. During a large investment made by the ASX, this has resulted in an increase of capital expenditure. Capital expenditure was 80.4 million. This was due to the ASX ongoing investment to refresh ASX technology capabilities. Furthermore, capital raised in June 20 was 16.536 million, up 815% previous corresponding years period. A 1.0807 million of initial public offerings capable was raised in June 19. Total initial capital raised in FY20 was 27 billion, of which 17.9 billion was raised in 2H20. For instance, when compared to last year's result of 37.4 billion was raised during the first financial reporting period, and a further 5.3 billion was raised in the second reporting period. Throughout this year, the Australian government has made a number of announcements in order to respond to the introduction of COVID-19. The Reserve Bank of Australia issued low cash rates of 0.25%. This was made during the period of March and still in place to this date. Furthermore, government bond yields were showing small returns. Gross domestic product fell by -7%, and unemployment rate was at a record 6.8%. As a result of the financial announcements, this saw people's financial behaviours shifting towards a stock exchange. This was evident for the ASX, which saw volumes of daily trades being made as an indicator from the ASX Annual Report 2020. So the average daily volume traded during this month of June was 8,678 million. This was an increase of 32.5% on previous corresponding periods and up 16.5% on previous period. Average daily value traded in 2H20 was 8,104 million, up 16.5% on previous period. Average daily value traded in 2H20 during the month of June saw the number of 1.782.713, which was an up from 4.6% on previous corresponding periods. Average daily number of daily shares in 2H20 increased 24.3% over which was made during the 2H19 period. Furthermore, inquiry trading volumes also peaked on 13th of March 2020, which when 5.18 trades transactioned through the ASX, doubled the previous pre-COVID-19 daily set in August last year. As indicated throughout the JP Morgan report, the valuation of ASX stock price expected during June 21 PT of 79.14, which saw it equal to that discounted cash flow valuation of 79.14. This was based on WACC, which was 7.9, forecast period 5 years, terminal growth rate of 3.0%. Further expected indicator of revenue growth is expected 1.5% during FY21 and expected to rise to 4.6 during FY22. Return on capital is not expected to rise. The report indicated weak growth during 21 and 22. As shown throughout the following cash flow tables, the following years of cash flows are expected to decrease in value and expected to fall during the period of 21 and 22. I would like to bring to your attention the following ratio analysis established throughout the JP Morgan report indicated a weak revenue growth are apparent during the 21 is a growth of 1.5% and additional 4.6% during 2022. This is quite a fall when compared to 20 revenue growth of 8.0%. EBIT margin and net profit margin is also expected to fall, indicating weak following years. However, some positives is demonstrated within the ratio analysis table. EPS growth is expected to rise in value from 2.9% during FY20 to 3.4% in 21 and further rising to 5.3% in 2022. Therefore, due to weak following years, it should be recommended to hold for the reason of weak growth throughout the business. It wouldn't be right if we did not mention potential risks that could occur for this stock. Some of the following risks were outlined throughout the JP Morgan report, and others are gathered throughout the annual report that was established this year. The first risk that is that of potential competitors that could enter the market, as the ASX has a time of presenting there is no real competition and has a single monopoly over the market. The second risk is the market no longer value and defensive assets for the ASX earnings stream. And lastly, unexpected financial trends and unsure about future outcomes due to COVID-19. The last key point is the major factors and the biggest risk to date, as COVID-19 still has potential to impact the Australian market even worse than it already has. Thank you for watching my presentation, and I hope you enjoy.